there's $1 trillion of basically paper gains, right? And $1 trillion actually, it sounds big to us, but it's probably not that big in the grand scheme of how indebted the country itself is, right? $33 trillion of US debt out there. So $1 trillion, maybe it's actually not that big of a reval event anymore. So this is kind of, I think, the tension as to do we do it, do we not do it? If we do it, doesn't move the dial that much. But the thing that is really interesting then is, hey, what if we then actually do find a way to find liquidity, a funding-based liquidity on the $1 trillion of gold and buy Bitcoin? And $1 trillion of Bitcoin is actually hugely impactful for the Bitcoin market. And so if there's a way to unlock the ability to build leverage on the paper gains of gold to take a call option on Bitcoin, there's something incredible here that could happen.
Markets don't change overnight, they shift when the right kind of money shows up. Jeff Park, partner and chief investing officer at ProCap BTC, says Bitcoin is still waiting for that moment. Retail investors helped prove the idea, but institutions haven't fully stepped in yet. The next leg of adoption, he says, depends on bringing those large-scale buyers into the market with clear incentives, stable regulation, and long-term frameworks that allow capital to stay rather than just speculate. Park points out something few notice: the U.S. Treasury still values its gold reserves at just $42 an ounce. With market prices around $3,850, that's roughly a hundredfold difference over $1 trillion in unrealized gains sitting quietly on the government's books. If even a portion of that paper value were redirected into Bitcoin, it could bridge two monetary eras: the physical gold standard of the past and the digital reserve system of the future. $1 trillion flow into Bitcoin wouldn't just move prices, it would redefine global finance. Park argues that even modest growth rates make the math compelling. If Bitcoin compounds at 12% annually, it would rise roughly 30-fold in 3 decades, enough to offset a meaningful part of America's fiscal deficits. And if it compounds closer to its historical average, around 40%, the same result could arrive within 10 years, reshaping the foundation of monetary policy itself. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
We need buyers in the marketplace. And I think it's inevitable that there will be more buyers at the institutional level for Bitcoin adoption, but we have to move that agenda with a little bit more focused deliberation. I do think that's why when we talk about gold in the context of Bitcoin, the first prong that we all attach to is whether the strategic reserve can be allocated to actually buy Bitcoin for the US, in which we are sitting on a bunch of paper gains with gold in particular, right? Because gold has been marked at the Treasury at $42 an ounce. And we all know right now it's trading at $38.50. That's 100x, right? That's 100x that we're sitting on. And if you do the math, that's a
great investment.
Hugely profitable investment, and reflexive in some nature as well as to what the US was able to accomplish with on the back of the dollar. But there's $1 trillion of basically paper gains, right? And $1 trillion actually, it sounds big to us, but it's probably not that big in the grand scheme of how indebted the country itself is, right? $33 trillion of US debt out there. So $1 trillion, maybe it's actually not that big of a reval event anymore. So this is kind of, I think, the tension as to do we do it, do we not do it? If we do it, doesn't move the dial that much. But the thing that is really interesting then is, hey, what if we then actually do find a way to find liquidity, a funding-based liquidity on the $1 trillion of gold and buy Bitcoin? And $1 trillion of Bitcoin is actually hugely impactful for the Bitcoin market. And so if there's a way to unlock the ability to build leverage on the paper gains of gold to take a call option on Bitcoin, there's something incredible here that could happen. And the math is pretty simple. If you own Bitcoin and you assume that it's going to go up by 12% a year, you'll make a 30x in 30 years. Right? I mean, it's actually going to be able to cover most of the fiscal deficit hole that exists. And if you think it's actually going to go up by 40% per year, which is what the CAGR has been otherwise annualizing, it's 10 years. So the idea of having a gold revaluation event that's Bitcoin aligned, I think is really the most interesting political and economic story that reimagines the opportunity set to be so much bigger than what even MicroStrategy is doing with its own. I think it's actually the incredible opportunity of Bitcoin and its greatest fallibility, which is that when I was pitching Bitcoin to investors at Bitwise, easy parallel you would draw is Bitcoin being called digital gold. But I think all those who know crypto well enough know there's an asterisk behind that, which is gold, to your point, is physically immutable, but Bitcoin actually is a living, breathing code that actually does require stewardship and maintenance, which is why there's developers and nonprofits that actually take part. They have to run the clients. It's supported by miners. There's different mining pools, and there's actually kind of an economic activity behind the endeavor of the final output that is a Bitcoin block. And so, I also thought one of the reasons maybe Bitcoin may not be accelerating as much as gold, I don't think this is actually the case, is that there is so much internal drama right now within the Bitcoin community about very small things that has captured the imagination for some of these technological / existential philosophical risk questions. So in some sense, maybe it's a little bit of a disservice to our own community that we do it so openly in a way that is all about public information sharing towards a community-owned project. But at the same time, if I were outside and I was a BlackRock ETF buyer and I listened to the conversation that's happening between the Bitcoin developers, I might say, hold on a second. This is crazy stuff I don't understand at all. What is a spam filter? I don't understand what a relay policy is. And this doesn't sound anything like I can hold in my hand. And then it's very dissuasive, actually. And so the line we have to walk is being thoughtful about why this is actually an important conversation. And it's a conversation that helps us future-proof Bitcoin as the ultimate store of value, which requires work and education. And it's time to kind of level up, but at the same time, do it in a way that's cohesive and one that shows a unified front across the Bitcoin community. And that's always been the fun part of the social mission of Bitcoin. There's always cycles of investors and developers coming for different missions as to what Bitcoin represents in the moment of decentralization.
Gold's been the story of the year, and while it shares some surface-level similarities with Bitcoin, the real driving force behind gold's rise is geopolitics. You can't understand this move by staring at charts. You have to look at who's actually moving money in and out of the market. Jeff Park says China is the key player here. For Beijing, this isn't a trade, it's a strategy. If the yuan is going to play a bigger role in global trade, especially in energy, China needs credibility. Gold provides that. It signals financial strength and trust, the kind needed to support a global currency. The groundwork started years ago, when the Shanghai Gold Exchange launched in 2012. Few noticed, but now it's the world's largest market for physical gold, overtaking London. That didn't happen by accident. China has also built vaults in Hong Kong, inviting offshore investors and even other central banks to store gold there. The message is simple: back your currency with gold, use it in trade settlements, and you begin to shift global power, just like the US did after World War II with the dollar. This isn't just a market move, it's a long-term financial realignment in motion. Let's get back to the interview.
Gold's definitely been the story of the year, and I think at some level there's a common parallel with Bitcoin, but there's also a distinct tone that's quite remarkable to gold itself. And I think to understand that, we have to return to some geopolitical, some history, and recognize that at the end of the day, these are driven by market participants and buyers and sellers, and ultimately flows that take dominance over what I might even argue as just facts that we can observe, technically speaking. So big news this week that the U.S. Treasury's Bitcoin reserve, gold reserve has actually hit $1 trillion. That's a big number, and that's because gold is not at 38.50. At the other side of this is the fact that the U.S. reserve of gold is actually at a 90-year low. This they did not report in the mainstream media, and here I think lies the dilemma. Gold is going higher, but the U.S. share of its gold reserve at a global level has decreased to a pretty low level. And this is the tension. And I think people like to talk about the price of gold, but the other dimension we need to consider is the relative level of gold's ownership across the geopolitical arena beyond just the absolute price itself. So I think this is partially why we're seeing such dominating flow with gold narratives, because there's active geopolitical participants, namely China. China has been very, very active in the marketplace in wanting to exert some influence on the dollar hegemony, but also have now actually taken action by purchasing gold directly in the marketplace. So I think there's a lot of moving parts here, but ultimately the salient facts are that at one point in time, post-World War II, the US had over 50% of the world's global gold reserve supply as a central bank, and now it's less than 20%. So who's making up for the compensation on their side? Likely China and many other BRIC countries in the lead. And I think that sets the backdrop for the conversation in gold that is, at this point in time, different than Bitcoin's adoption story to come on the institutional front. When we talk about the dollar hegemony, you'll find people on both sides of the camp saying that actually the US dollar has never been stronger. And then you'll find people who will say, what are you talking about? I see the complete opposite. And this is actually the heart of the question as to what facts are they looking at. When you look at the total purchase of US treasuries by our foreign holders, that share has increased. There, in fact, are more foreign holders of UST long-dated debt than before. So on one hand, that makes it feel like we're secured in the dominance of actually being the world's greatest borrower. But the other side of it is that the dollar has actually been decreasing for settlement purposes across global trade, mainly in the ways we think about how to do big business with oil and global trade commerce that exists with hard commodities. So this tension, I think, is ultimately represented by what we're observing with gold price and the amount of gold reserve that is now being held in the US versus other countries. So for a country like China, if you're actually trying to make the renminbi a settlement currency that you want to use for oil import and want to settle using CNY, one of the ways that you can actually do that is to really just buffer up your own reserve of central bank gold such that you can feel to be a more creditworthy counterparty than it ever would have been. And so the launch of the Shanghai Gold Exchange, I think in 2012, was not a huge event back then, but it has now become a focal point for everyone to recognize what has happened in the past 10 plus years is now Shanghai does have the market for having the largest gold trading volume in the world for physical gold settlement. I mean, that is pretty astounding. That is the thing that people historically associated with London and the European markets. But physical gold now actually trades in China. So the other thing that they did earlier this summer that I think is remarkable is they, for the first time, opened up vaults in Hong Kong to allow offshore investors to put their gold in reserves to entice perhaps other central banks. And so the model that I think China is going for, in which you can back your sovereign fiat with gold that can then be used for trade, is not dissimilar at all from how the US eventually forced its will upon its dollar hegemony. We're just seeing China do its own version, which is why they have been the biggest buyer of gold since 2014. And I think the most shocking charts, if anyone can see today, would be to just pull up like how much gold exists on the Shanghai Futures Exchange. Back in 2014, it would have been less than or around 10K. And now it's actually above 70K.
It's crazy.
I mean, it is nuts. It's actually one of the most incredible up-only chart you'll ever find in the commodities market. But I think that's why gold has been so strong. It's always flows driven. And there's a natural buyer for physical gold and the paper gold as dictated by the Shanghai Futures Exchange.
Something bigger than a market cycle is forming beneath the surface. Gold is regaining its role as the backbone of credibility, while Bitcoin stands on the edge of institutional acceptance. Two very different assets now orbiting the same question: what replaces trust when debt no longer does? The world's financial map is being redrawn not through speeches or sanctions, but through quiet, deliberate capital shifts. Each ton of gold added to Chinese reserves, each balance sheet that begins to include digital assets, signals the same truth nations and investors alike are searching for stability outside the traditional system. What's emerging isn't competition between old and new money, it's convergence. Gold built the framework that allowed global trade to flourish, while Bitcoin offers a decentralized path forward that could eventually transcend borders and governments. If these two forces begin to align rather than oppose each other, the next monetary order won't be decided by policy meetings but by who holds the assets the world still trusts when confidence falters. As central banks fortify their vaults and digital networks continue expanding, one question looms over the next decade. Will the balance of power belong to those clinging to legacy wealth or to those building the architecture of a new financial age? So stay tuned. If you're into real data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.